It's about that time of day again. My name is Joseph. Thursday evening, November 15th. Welcome back to your nightly newsletter. My job is to help new traders earn consistent profits using a simple and reliable trading strategy. And my plan tonight is to identify the best opportunities setting up for tomorrow's trading session. And tonight, we're covering crude oil, S&P, Nasdaq, gold, and euro. Starting off this evening, oil is sideways and range bound, and that tells me to fade those breakouts, buying low and selling high tomorrow morning. The S&P is bullish, but a double top at the high tells me we're likely going into a range with a bull bias tomorrow. Now we know we want to look to buy the low of that range using seller failures. The Nasdaq is also bullish, and it's got a lot more of that range on the Nasdaq. So the goal is to get long below the low of that range tomorrow, and we're focusing on seller failures. How about gold? Gold is bullish. It also has a trading range tonight, so my plan is to focus on buying seller failures at the low of that range tomorrow. And the euro is bullish with its own trading range. Absolutely. Why break the pattern now? So my plan for the euro is just like the others. We're buying below the low of that range using those two try seller failure patterns. We're seeing a bunch of ranges, a bunch of consolidation going into Friday's trading session. And I'll tell you, for a lot of rookies out there, trading ranges and sideways markets can be really challenging at first. But I promise you, once you learn a simple trading strategy using range breakouts and fading those breakouts using what I call the two-try rule, I think you'll agree range-bound markets aren't as scary as they are. Consolidation, sideways markets, range-bound markets, whatever you want to call them. We get a great example of a bunch of those setting up for Friday's session. So we'll break it down for Friday. Tomorrow morning we'll be in our trade room bright and early. My goal tonight is to get this plan put together. So we have a plan put together for Friday morning. Before we jump into those charts though, I want to remind you, if you watch me tonight on YouTube, you can find all of the details about this strategy written out right here on my blog at Sideways Markets. I'll leave all the links, the description of the video. If you have any questions about anything covered in the video tonight, please remember to post those questions in the comment section below. If you like what you see, please support the channel by subscribing, and don't forget to hit that bell icon so you always get notified every time I publish something new. And again, if your goal is to become a consistently profitable trader, make sure you check out our homepage here at School of Trade. Join our mailing list. I teach trading strategies that anybody can learn to use successfully, and we trade these every day in our trade room. Don't forget, you can download all the charts from tonight's video. They're available right below the video on our blog. There's a big button there to download all those charts. And if you have any questions, you can always pick up the phone, call that toll-free number, use our live support tool. I'm always here to help, right, 24/7. Look forward to answering all your questions. All right, tomorrow morning, Friday morning, we open up 8 o'clock Eastern time, bright and early tomorrow morning. I want to make sure we are locked and loaded for all of our clients here at School of Trade. First things first, what's our schedule look like for tomorrow morning? Tomorrow morning, we got two basic news events tomorrow. One is at 6 a.m., right? Our good friends, right, in Italy, they have the CPI number, the consumer prices. That means inflation. Anytime we talk about inflation, we're thinking currencies, we're thinking gold. So euro, gold, definitely on our radar tomorrow morning, bright and early. If you're with me tomorrow in the trade room, we open up at 8 o'clock Eastern time. We're going to have a front row seat to that industrial production number at 9:15. When I think about industrial production, I think about factories. When I think about factories, I think about natural gas, heating and cooling, and I think about oil, right, and all the shipping that is done out of those factories. So the oil complex tomorrow around 9:15 is certainly going to be on our radar. Now, also, too, it's important to remember on a Friday morning, it's early in, early out. My cutoff is always 11 a.m. Eastern time on a Friday morning. I try to get in early and get out early because as the day gets later, as we get closer to lunch, volume tends to dry up and those patterns become less than reliable. So set the alarm clock early tomorrow. Get out of there early after you make your money. And again, my goal tonight is to put the plan plan together so we can trade the plan tomorrow morning starting off at 8 o'clock with all of our advanced members. Let's jump right in. We got crude, S&P, Nasdaq, gold, and euro. Starting off tonight on oil. Oil is range bound and sideways this evening, and that tells me to ultimately focus on failures, buying low, selling high, and using the 2-try rule until we see this market break out at some point either tomorrow or maybe next week. Now, diving into this chart here tonight, I apologize, I didn't see rollover coming. This is the 119 contract here today. Last night, I was on the 1218 contract, came in this morning, and we had rolled over. So I apologize for the, usually I'm pretty good at giving you guys a heads up on this, but like I always remind you guys, oil will typically roll over on the 18th of every month. For some reason, I may have missed something, but it rolled over last night. And so this morning we came in, we saw volume was too low on the 1218, and we rolled over to the 119. The good news is you really can't mess up rollover. If you miss it like I did, right, or maybe whatever, right, it doesn't matter because you'll see it the next day. You'll see that volume is very, very slow. So we are on the 119 right now on crude oil. We traded that today in the trade room, and as you can see here, it's a mess, right? It's a mess. I have a funny feeling that this kind of unexpected rollover, right along with inventories this afternoon as well, probably caught a lot of people off guard. So that's probably why the market was so messy at the end of the day. And really, what you want to think about when it comes to ranges, really quickly, you get a lot of ranges tonight, a lot of consolidation, a lot of sideways markets right now on these charts. What you really want to think about is first of all, where is the range? I'm always going to make sure first that I define my range properly. Ranges are marked by double tops, double bottoms, right, at those highs and lows. That gives me the consolidation. That tells me now there's a range. Now, the one thing I want to do now is once I know I have a range, then I need to understand, do I have a bias? For example, do we have a bear market that then goes into a range? If the bears have control before the range, then we're going to sell high above the range high. But if the bulls had control, which is what most of these had today, if the bulls had control into that trading range, well, then we're going to focus on buying below the range. Okay, so the first things first is find the range. Second thing is, do we have any bias, right? Most of them have a slight bull bias tonight. You'll see more of that in a moment. And we do have a bull bias to it. We want to buy low, right? Now, oil has kind of both going on, but the bottom line is find the range, then find the bias, right? Is it a bear bias going lower into the range, or is it a bull bias, right, going into the range before? Once we know the bias, then I'm going to add my range expansions. I'm going to take the size of this range, copy it, paste it, and bring it up. That will create resistance. Create my resistance using the same size of the range. Now take that range, copy and paste it down, and we'll create support below. This creates key support and resistance. I've got support now that I want to buy off the low, and I've got resistance now I want to sell off the high. Now remember, right, got to make sure you go in the direction of the bias. So if we have a bull market now, right, if it's bullish going into that trading range with a bull bias, I'm going to focus on buying below the range. If the market is bearish as we go into that range, I'm going to focus on selling above the range, right? Relatively easy. And then how do we do that? How do we buy low? How do we sell high? We use a failure pattern, what I call a two-try failure, a two-try failure. Now, I'm going to warn you on this one. There are a number of different nuances that go into the two-try pattern. There are major two tries, minor two tries, nested two tries. I'm not going to have the ability to really go into all of those details tonight because we've got a lot to cover here tonight, but I will give you a link to a free trading class where you can learn more about those in just a few moments. So the two-try failure pattern looks like this. As we go lower, I want to try to use that support down here as best I can. One try, pull back, two tries, and then back up in. Right? Let those bears try once, let them try twice, and then once I see that second try start failing, I'll look to buy going back up into that range. The same thing is true, right, to the opposite side. If we go higher here, 1 try, pull back, 2 try, and again, I'm going to try to use that resistance line overhead as a key area where I'm looking for that turn. I'm waiting for those buyers to try once. I'm waiting for those buyers to try twice. And then once I see those buyers start to fail that second time, then we'll start looking, right, to jump into that move as we go lower, right? Pretty easy, right? It's called a 2-try failure pattern. And again, there are a lot of different nuances to that 2-try failure. We'll go over those more here as we go, so stay tuned on that. Another question that I get quite often is, all right, Joe, now we know how to buy low, sell high. We know how to use the bias. We know how to use the range expansions. What does a breakout look like, right? What does a breakout look like? A breakout, we've got to get through that resistance overhead or through that support below. And we have to see the successful 1, 2. For example, let's say we go higher here. 1 try, pull back, 2 try. If I can see now these buyers are giving it once, giving it twice, and we're going through that, again, that range expansion resistance level, now I know we're good to go. The problem is oftentimes we see something like this where we'll go 1, 2, go, and it's very tempting to want to buy up here, but the market sits and then it just dumps right back in. So you really got to watch that range expansion. Same thing down bottom, right? Make sure you keep an eye on that range expansion. As we go lower here, 1, 2, got to get through it. If we can get through that range expansion with that 1 try, 2 try, again, use that 2 try rule, right? Use that 2 try failure. If the second try is successful, 1, 2, and runs, well, now we know we have a successful breakout. So a quick recap. Step number 1, make sure you know what the range actually looks like, right? Double tops, double bottoms, make sure you got good rotation. Do we have a bias? Are we bearish going in? Are we bullish going in, right? Find that range expansion above and below. 1 try, 2 try, back in, 1 try, 2 try, back in, right? How do we know when the market breaks out? You got it. We get that 1, 2, right? 1, 2, go, right? Big, strong breakthrough. 1, 2, go. Big, strong break through that key level of support and resistance. That way we can get far enough away from that range to kind of disconnect, right, from that consolidation. All right, so now that we're going back to our charts, and I apologize for that little bit of a pit stop there, but I figured I would cover that right at the beginning here tonight because a lot of what we're doing right now, right, is going to revolve around those trading ranges. So this one on crude is a little bit tricky because as you can see, there is kind of both right now. There's a bear move going down, but then you also have a bull move going higher. That's why I have this as a neutral bias right now, because I think you're going to probably see both sides come into play. Now, I think the range itself is right here. This is what looks like is going to be our range for tomorrow, right? That's that 50, right, down to that 56 even area. The range itself is relatively important because I think the triangle is also probably, you can see what's happening here. We're sitting right inside that triangle right now. So that triangle is probably going to be the most important clue we're getting right now. What I know now with that triangle is that if I mark up these swings, mark up that swing, mark up that swing, mark up these swings, whenever I see a triangle on the chart, then I know the swings become the most important pivots for us. So now we know we have a range. We get a relatively neutral bias. There really isn't any directional bias. Now we know here on the crude, we're looking for those buying opportunities using that 1 try, 2 try back up. Looking for those selling opportunities using that 1 try, 2 try back down. If we stay right in the middle, we stay out of the market. We sit on hands in the middle. And how does it break out? 1, 2, go. Take that range, copy and paste. Take that range. I'll make it a little bit darker here for us. There we go. Perfect, right? So now if we do get, right, that breakdown, we've got support around 55. That looks good. We've got resistance up around that measured move, 58.50. So those are our key levels here right now. So right now, I want to go up, one try, two try, sell back down. I want to go down, one try, two try, right back up. And again, there are a lot of different nuances to these, right? Like I said earlier, right, the two-try rule has a lot of different ways to use it, right? For example, here's an example of a one-try, two-try, major two-try with a nested two-try afterwards. Right? Here's a major two try without much momentum. Lots of different types of two tries. And the easiest way for me to go into more details on the two try failure pattern is I've got it included in my free trading course, which I'm going to put a link here in the upper right hand corner. I'll also, if you're on the blog right now, I'll put a link right below the video on our blog as well. Grab that free class. I don't have enough time to go over all the details of all the entry patterns right now, but I've got my two try failure pattern is right on the top of my list for tomorrow because of these ranges. To learn more of the entry patterns that I use, the time frames I use in the trade room, make sure you grab that free trading course in the upper right hand corner. So it's relatively easy here on crude, right? One try, two try, back up we go. One try, two try, back down we go. It's basically a neutral bias here right now. And as you can see, with this big strong move down, we may have, with that range expansion, we may get a relatively strong move down and then find ourselves back into that range tomorrow. Same thing to the upside. We may see this go 1, 2. This could be a relatively big move higher because the size of this range is so large. Again, you've got your range expansions above and below. This could get pretty interesting tomorrow, right, if we get a nice shot out of this range. So stay out of the middle, buy those lows, sell those highs, use those two try failure patterns. And again, tomorrow morning, we'll trade this together. If you want to learn more, if you're not with me tomorrow morning, grab that free course below the video, also in the upper right-hand corner, in that information icon up in the upper right-hand corner. Grab that free course and learn more about those two try failure patterns. Let's keep going. Over to the S&P. Now the S&P is bullish, much less dramatic, right? A lot less slop and chop on the S&P right now. And this is how most of these markets are going to be for the rest of this video tonight, right? We're definitely bullish, but this double top at the high is a big red flag. And this, in my experience, is one of the most difficult parts of learning to trade, is that when a market is rallying higher, trending higher, you want to keep an eye out for those double tops, because when you see a double top like that, it tells you mark up that as a range. Now, of course, we know it's a range, so now we know it's one try, two try, right? Buying below that range, right? Using that two try rule. Buyers have the bias, buy below the range, using that one try, two try failure pattern, right? Very simple pattern. The key is, though, is once you see that double top, this is no longer just your normal trending market, right? This is a range-bound market. So now that we know we have a range, we find our range, we're going to bull bias to it. So what's the plan tomorrow? The plan is one try, two try, yep, buying right back up. That's the plan here for tomorrow. This could be a major two try, right? It could be a minor with a nested two try, right? Again, we're looking for that one try, two try, back up in. Now, what if price keeps going higher here? Then what do we do, right? What if it actually isn't a double top? Maybe it's just coincidence. Maybe it just happened to close there right at the highs there and bounce off it. Maybe it's not a double top. Maybe it does keep going higher, right? If we do keep going higher here, right, and we're not, again, pulling back off this high, I'm expecting it to pull back off this high, one try, two try, right, to buy off of that low. But what if we keep going higher here? If we keep going higher here, got to beware that measured move is waiting just overhead, up around that 27.50. We'll call it 27.50 and change here. Most important thing is that's going to be seen as major resistance. So if we do keep going higher, but we're running into major resistance, my favorite pattern now is a trap pattern. Trap patterns are most useful when you don't have a lot of open space left to run. Traps allow me to buy nice and low below a prior bull swing. So if we do stay in the range, right, if we stay inside the range, one try, two try, buy back up. One try, two try, buy it back up, right? If we keep going higher, if we keep going higher here, and this isn't a range, right? Maybe I'm wrong. Maybe it's not a range. If we keep going higher here, I don't want to buy into that resistance. In my experience, the best pattern to use when you've got resistance kind of looming overhead is to focus on a trap, right? Focus on that bear trap and look for that trap below the low of that range, or should I say below that prior swing, using the top of that range, of course, right, as support. This will be a key level of support here that we can use as a level of support. So if it does keep going higher here, that's our plan. If it pulls back, it's a range. It's a 2-try failure. Pretty easy plan, right? Pretty easy. We also know as well, if it goes lower, 1 and 2 and runs, then we know, right, that's a range breakout, 1-2 breakout. Then, of course, we'll mark up that new low, find that new channel, and we'll sell off the high of that channel. So really, there are 3 basic scenarios that you want to be ready for tomorrow. One is a pullback, a 1-try, a 2-try, and a buy. 2 is a pullback, a 1-try, a 2-try, and a breakout. Mark up that new channel and sell off that channel high, right? Breakout, target's now back to that low. Or 3 would be if we continue going higher, right? Best plan of attack when you're running low on open space is a trap pattern, right? Below that prior swing. And again, much like I mentioned earlier, you can learn more about these trap patterns. In fact, all the entry patterns that we use every day in our trade room, you can learn that by grabbing that free trading course in the upper right-hand corner, or it's linked up below the video. Let's keep moving. S&P's pretty easy here. Just waiting to see what we get next. Now over the Nasdaq. The Nasdaq is obviously into a range. We're bullish in our bias into that trading range. That tells me to focus on buying the low of this range. And you guessed it, using that 2-try failure pattern. So bull bias, right? Double top in price. That tells me this is a range. You can also see that flat moving average as well. Knowing that is the range, right? I copy and paste up to find resistance, down to find support. Those are my range expansions. We've got ultimately 2-3 scenarios here. The first scenario will be the 1-try, the 2-try, the buy back up. Right? Again, there could be a few different variations of this. It could be a major 2-try, right? It could be a strong breakdown with a nested 2-try, right? That always works well too. The bottom line though is 1-try, 2-try, let those bears try once, wait for the pullback, let them try twice. And again, you can see hundreds of examples of those 2-try failures as part of my free trading classes. You can also join me tomorrow morning and we'll look for them together in our trade room. The only other option would be is a 1-try, 2-try breakout. Nice strong breakdown. Find that new channel. We're going to sell off the top of that channel. Target is back down to retest that low. Relatively easy there if we get a break to the downside there. If we stay right in the middle, stay away from that middle, 1, 2, and buy off of that low. What if we go higher here? So yeah, going higher is going to be a little bit tricky here, guys, because you've got that measured move, 1, 2, 3. You got measured move resistance there at 69, 67. You've also got a major high there at 69, 62. And then right on top of that is the range expansion, right, just below that 69, 80 area. So we got a lot of resistance up here. I would say the only way that you could buy a breakout would be if we saw a real strong, like we're talking real strong move higher here. If we saw a real strong break higher that didn't get to the measured move, then I could justify, right, a little pullback and buy for that next leg, because anytime we see a strong move in one direction, we'll probably see a second leg. But be aware though, right, if we get that second leg and it's right into that high up here, that's going to be a very difficult pill to swallow being a buyer up there, because again, we're running right into that major level of resistance. So it's really going to be a little bit of a timing game here if it goes higher. If it goes lower, it's easy. It's just 1-try, 2-try, right, back up in. If it goes higher here, though, I don't want to buy into that resistance. We are bullish, so look for that strong move up, but we've got to kind of get the pullback before we get to that measured move, before we get up into this resistance over here. If we do see a strong enough break higher, we should be able to get one more leg But that's when I've got to wait and see what happens next, right? Do we turn over and go back into the range, right? Or do we break through it and we have a successful breakout? If we do see a successful breakout, find that new channel and we'll buy off the low of that new channel. Just like if we break the downside, 1, 2, 3 breakout, right, we'll sell off of that new channel. So it's basically the same basic pattern. We just have to see the breakout first. I really don't want to try to predict those breakouts. Again, ranges can be tricky if you're trying to trade them, right, like a trend. This is not a trend, right? It is a bull market into a range, but right now it's a range with a bull bias. So buy those lows, sell those highs, right, fade those breakouts, and be careful trying to buy that breakout as we go higher. Let's keep going. Nasdaq here now, over to our gold. Gold, surprise! Yeah, we have a trading range here again. Gold is bullish with the trading range and a support trend line on the chart this evening. This bullish momentum tells me to focus on buying at support levels tomorrow morning, and the best place will be using those seller failure patterns to buy the low of this trading range. As you can see here on gold, we make that strong move up. The bulls have the bias. There's my double top. Once I see the double top, then I know we have a range. We mark up our range. Bull bias going into it. I've got this support trend line coming down off of these lows. So that is definitely something I would love to incorporate for tomorrow. I want to buy below this range. So 1 try, 2 try, back up. Any of these levels can be used as support. It really doesn't matter to me. I just want to get below the range. 1 try, 2 try, right? And again, it could be a deep, deep pullback with a nested 2 try. If you're a client of mine, you know what I'm talking about there, right? Or maybe it's a major 2 try, right, as we get lower lows and the bounce back up. There's a lot of different ways we can look for it. But again, I want to see it once, I want to see it twice, and then look for that buy going back up. I'd love to use that trend line if at all possible. It's a bull bias, so trying to be a buyer up here is going to take a lot of strength. If we see it jump up, right, if it really punches higher, we should be able to get at least one more leg. So if we do see it really jump, like really push, right? If we see one of these bad boys again tomorrow, you can pretty much almost guarantee it's going to pull back to the moving average, right? And we'll get one more leg higher. The question, of course, is do I want to be buying up here, right? That's the problem. So if it does break out and run, now we got to wait for that pullback. We don't want to buy too high or wait for that pullback, right, and buy it, right, and buy it high and buy it low at support. That way we're not buying up into that resistance as we go higher. So the key is in a bull market, if we're trying to buy above that range, it's going to be a strong, strong move, because that strong move tells me, right, much like any other strong move, we're probably going to pull back and do it again. Right? So if we do see a strong move, we're probably going to pull back and do it again. And I can look for that pullback only if we get that real strong move going higher. Just be careful buying into that range expansion, because you will see it acting as major resistance. So stay away from that middle, right? Avoid the middle. Don't fiddle with the middle. Buy low, 1 try, 2 try. Don't sell high, because of course it's a bull market right now. We're trying to focus on buying at support until we can get a breakout of this trading range. Then last but not least here, over on the euro tonight, the euro is bullish, surprise, with a trading range and a hidden channel on the chart this evening. The bulls have the momentum, so my plan is to buy at support levels, and the best location for that is the low of this range. We have a bull bias, not as dramatic as gold. We got double top on the chart. Double top tells me find the low between those two tops. That creates the range. So now we know we have a trading range. I've got a pretty well-behaved little channel going on here too, so that's a level of support I want to use. But again, we know the drill here. It's a pretty simple plan, right? I want to get down, 1 try, 2 try, and buy off the low of that range. We're using that 2 try failure pattern. Try to stay away from the middle. The middle will continue to be a real choppy area. Stay away from that middle 1, 2 try rule. Buying below the low of that, right, of that trading range. And again, if you want to see lots of examples of that 2 try failure pattern, grab that free trading course I've mentioned a few times here already. Now, the big challenge will be, what if we go higher? So if price goes higher, you'll notice we had an example earlier, right, when it kind of poked its head above here. You don't want to trade those breakouts. My plan will be if we can see a strong enough move, right? Remember, anytime we see a strong move in one direction, it's almost a guarantee that we'll make at least a retest of that high. So if we do get that strong move going up, I'll look for a buy just because that sheer momentum will probably carry it higher. But I really don't want to be trying to buy up into this 14,300 area because that's where we have that range expansion level waiting as resistance. So at that point, if we do get that strong, again, key word here, strong break higher, I'll try to use this trend line as support, look for that buy off the low, and then we'll see where we go from here. Do we break through these highs? If we do break through it, then we know we're into a trend. I'm going to find that new channel, buy the low of that channel, right? But watch out though, if we do break, pull back, and stall, this could easily end up back into that range. And if we do see it end up back to that range, I'll look for what we call that nested two try. That one, that two, right? And that two try buyer failure to go back down into that range tomorrow morning. So again, just quick recap here. As we go into the middle, we stay away from the middle. We buy low, one try, two try off of that low. If we go higher, a strong enough breakout will allow me to buy the pullback, but be very careful. Do not buy into that high. So if we do see a strong enough breakout, we can buy that pullback, but do not buy into that high though. Then wait and see where we go from there, right? Do we go up and through? If we do, mark up that new channel, right? Assuming, again, we break through, we can buy the low of that channel, right? If we do end up stalling out at that range expansion, I can't quite be a seller, but I will expect it to eventually end up back in that range. We'll look for what we call the two try, the nested two try, which means as it pulls back, let buyers try once, let them try twice. Once we have those buyers trying once, trying twice, that nested two try, we'll then look to sell it right back down into that trading range. Stay away from the middle, buy those lows. Again, with enough momentum through the highs, we can buy the breakout, but watch those range expansions because we don't want to buy into those range expansion highs. And again, trying to sell off the high, focus on that nested two try failure pattern. And don't forget, tomorrow morning, I realize I've covered a lot of this stuff tonight, right? In not that much detail, but that's because we'd be here for hours on end if I went into all the details that we cover every day in our trade room. If you want to learn more, come join me every morning in our trade room. We open up at 8 o'clock Eastern time. Grab that free trading course that I mentioned earlier on to learn the basics and learn all the entry patterns. I've got a great free trial right on the homepage here at School of Trade. Call me anytime if you have any questions or learn more about our beginner, intermediate, and advanced classes right on our website. Guys, been an awesome week so far. I'm looking forward to another great day tomorrow as we wrap up this week of November. Will I see you guys there? 8 o'clock Eastern time tomorrow. Be there, right? Be there with me. If not, don't forget, we don't do the newsletter on Friday afternoons. Our next newsletter will be next Monday evening, so I'll plan on seeing you next time. My name is Joseph. Don't forget, be well out there. Be nice to each other, will you? And be here next time. Adios, amigos. Bye-bye for now.